Transferring wealth successfully starts with asking yourself questions that will give your family a better life now and for generations to come. In this podcast, financial professionals John and Michael from Beech Financial Group guide you through eye-opening questions to help you discover the truth about your wealth. Now, on to the show.
Hello and welcome to The Truth About Wealth with John and Michael Parise of Beech Financial Group. Today they have brought back a guest that they had on the last podcast. We're going to be doing part 2, and that guest is Mark Sims. He is the Vice President of Business Development at Captive Alternatives. Now, Mark and his team bring over 100 years of experience collectively and have been providing risk management solutions for more than 16 years. If you weren't part of that last podcast, you've got to go back and listen to it. Covered a lot of great information, and we're just going to get into the questions again today. Good morning, everybody. How are you?
Morning, Eric.
Hey, Eric. Good morning.
Good morning, Eric. I'm doing
Welcome
great.
back,
Thank
Mark.
you.
Oh, good. I'm glad. Welcome back. Thank you so much for coming back.
Sure.
John and Michael, I'm just going to hand it right over. Let's get rolling.
All right, I'll jump in here. Mark, I thought your last session was excellent, and I think I want to continue with some basic questions that I think our audience would like to hear. Number one, we talked about ownership. We didn't get to it last podcast. I want you to focus on how these entities are owned or how they can be owned in the Puerto Rico world. And secondly, I want you to review the risks that you talked briefly about the last podcast. What type of risks you could insure, what's your top 10 list, I guess. And for full disclosure, we at Beech have a private insurance structure with Mark's group, and we've had it probably for about 5 or 6 years for the very same reason why we're discussing it today in the podcast. Risk is important to us, risk management. Like most of our business owners, they're always concerned about their exposure. The risks we have covered here is our E&O coverages, cyber risks, loss of key customers, legal defense, and these are some of the policies we have, and we fund them every year, again, to protect the legacy of our business. And we have been afforded the opportunity to build that war chest we talked about to do other projects for our family. So it's an interesting design for us as well. So Mark, why don't we just throw it over to you? Let's talk about the ownership structures and let's get into some of the risks.
Okay, great. Thank you, John. Yeah, the ownership structure is kind of different with this private insurance structure in Puerto Rico. As I mentioned in the last podcast, the Puerto Rico, our structure is under the Puerto Rico laws and regulations. And this particular private insurance structure is ran like a real insurance company does. We have when the client pays their premium, they pay it to a licensed insurance company, and they cede the risk and premiums down to a licensed reinsurance company. This licensed reinsurance company is under the guidelines of the Puerto Rico legislative laws. And inside this licensed reinsurance company, this licensed reinsurance company is made up by all of our clients' private insurance structures. The technical term, again, is called a segregated asset plan. Now, this segregated asset plan makes up and is this reinsurance company in Puerto Rico. And each segregated asset plan is not, quote, a separate entity as you would have maybe here in the U.S. They are part of and make up this licensed reinsurance company. Now, they call it a segregated asset plan because that under Puerto Rico's legislative laws, each segregated asset plans, their assets and liabilities are completely segregated from all the other segregated asset plans that sit inside this reinsurance company. Let me put a name to this reinsurance company we're talking about. It's called Madison Re. It's a licensed reinsurance company regulated by the Puerto Rico Department of Insurance. So each of these segregated asset plans sit inside and make up Madison Re. Now, each segregated asset plan is not a separate entity under Puerto Rico law. Each segregated asset plan, as I said, is part of Madison Re, and Madison Re technically owns the segregated asset plans. However, the business owner can hold the segregated asset plan in what we call a convertible promissory note, or like a bond. And they hold this note until at some point in the future they're ready to convert the note into a preferred stock, and hopefully at that point it has some value on the conversion. Now, these notes are held by however the business owner wants the note held. Do they want it held individually? Do they want it held in a trust? Puerto Rico's agnostic to the fact of who holds the note. And then, like I said, the note is held, the assets grow, hopefully, and then at some point in the future, the client can convert the note into a preferred stock. And at that point, they take constructive receipt of ownership of the note.
You mentioned trust, Mark, which is, if I could jump in here real quick, that's really where a lot of our families have found maybe an ancillary benefit to this private insurance structure, because many of the families that look at these structures, and just to add to that, I know one of the questions, Eric, you asked at the end of the last podcast was who really qualifies for this? What are the parameters on how to qualify for a captive? But many of the families that we use that go through, or that we work with that go through this private insurance structure, have estate planning benefits or estate planning needs that this private insurance structure can help them fill. So many of our families own their private insurance structure inside of a irrevocable trust where it's out of their estate for estate tax reduction purposes. So it's a pretty powerful ancillary benefit to the structure in Puerto Rico.
It could also be, second part to that is more on the generational side. You could generation this value to 2-3 generations. You can stay in trust until perpetuity. It's just an interesting concept, this private insurance structure from estate planning positions.
Yeah, and absolutely. And that's why, when we set these up, the family says, how should we hold the note, or how, that's why we work so closely with Copper Beech, because they're the best in that industry to help advise the client. So yeah, you do have that unique ability with our Puerto Rico structure to do that and have the note held in trust. I think the second part of your question, John, was what are some other, like our top 10 risks that our clients insure against. We do have a top 10 of our most popular risks that they purchase. So John mentioned a couple. We have administrative and regulatory actions, legal defense. None of us are immune to lawsuits. So the structure gives a way to help defend an illegal expenses that the business owner has, a loss of a key customer. This is a pretty popular one for us. We have several clients that come to us and said, such and such customer is 40 or 50% or 60% of our revenue. Loss of a key supplier. Cyber risk, data breach. Again, from our last podcast, this is a often looked at coverage that a lot of business owners have commercially, but there's a lot of exclusions, so the structure can do that. It can cover those exclusions. Brand reputation risk, medical stop loss. That's more for businesses that have self-insured healthcare plans. We utilize the structure a lot for that. Representations and warranties is a popular one. A lot of clients have representations and warranties or certificates of warranties that they cover. This works well in the auto industry, the furniture industry, labor stoppage and shortage. So those are our top 10 risks that our clients are really gravitating to insure against inside their own private insurance structure.
So basically, Mark, this is like I'll liken it to, you could own your own insurance company from like a Lloyd's of London. I mean, you could be a Lloyd's of London in your own business world. Am I correct?
Absolutely. Yeah. So you think about, you look in some of these commercial policies. You can take long-term care insurance. They have these policies where you can buy a long-term care policy from a commercial market and you never use it. You get a return of your premium. Cash value life insurance policies. It's kind of a refund of premium. That's what this structure does. It allows you the ability that if you manage your risk and have little or no claims over the lifetime of this structure, you get the return of your premium plus some investment income off of that. That's why business owners are more amenable to do this structure, is that number one, it gives them the ability to insure risks they don't have covered now, helps them sleep better at night now that they have that covered. And it gives them the ability that if they manage the risk, they get the return of their premium and some investment off of that.
Yes, so every business owner knows they have a lot of these risks, and they typically don't insure them currently, only because the cost of those premiums could be catastrophic to the cash flow of the company. So they kind of self-insure it. If it happens, I'll pay for it. So what your structure provides is a way to insure those risks that most likely will never occur. But if they do, they're catastrophic. So it allows you as a business owner to take this risk, now insure it. So now all your risk is covered in your enterprise. And this particular design, you actually keep the underwriting profits versus sending your check to AIG or another insurance company. I mean, so in simple terms, that's really what we're doing here. Am I correct?
That's correct. And these risks that I mentioned, especially those top 10, you can go buy these from a commercial carrier or Lloyd's of London, but they're typically expensive. And again, if they're low probability, the business owner's willing to not buy it there and roll the dice and hope it never happens. We had this with a particular client who came to us and said, look, one of the coverages he had was E&O. And he said, I sleep better at night. I know that I have this risk, but I run my business. I'm on top of everything. The likelihood of me having an E&O claim is nil until he had an E&O. And I got an email from him a few weeks ago, and he just said, Mark, I just wanted to reach out to you and thank you. I had a call with your claims management processing team yesterday. They are handling a claim that I had and and the claim is going to pay out on an error that I made. And then I'm going to skip down on the email because a lot of it's personal to his business. But he said, while I do not like to make mistakes or admit when I do, it is good to know that I have you in my corner to support my business and glad that your team is so easy to work with. This is literally the only claim I have ever made in my business, and the error turned out to be larger than I originally calculated. Either way, just wanted to let you know that you and your team and this private insurance structure saved the day. I wish I had other friends who had businesses that I could refer you to. So this came from a guy who never really had an intention to pay a claim, but at the end of the day, he made a mistake. It was unintentional. He had an E&O policy through the structure, and it paid, and it saved, his company.
That's fabulous.
That's a great story, Mark.
Yeah.
Now let's talk about who qualifies for this private insurance structure. I know Eric mentioned what size of a client do you have to be to have one of these. You want to walk through that a little bit?
Yeah, sure. I think a client that has a greater than maybe $1.5 million or $2 million in gross revenues, I think the minimum premium that makes economic sense to do a private insurance structure because of the claims possibility and the policy limits is probably a premium of $100,000 a year into the private insurance structure. I would say that's probably the minimum requirement. Typically an actuary is going to be able to identify, probably somewhere around 5 to 10% of enterprise risk coverages and premiums of gross revenues. So you're looking at a company of maybe $1.5 million to $2 million in gross revenues that this might make sense for, which affects a lot of businesses, right? There's a lot of businesses that have that.
Sure. Yeah. And just to reiterate, I think we talked a little bit about this on the last podcast, Mark, but there's really, you guys work with a ton of different industries. There's no, preferred industry that you work with, correct? I mean, anybody and in any industry should at least look at this as a risk management tool, correct?
Yeah. And if you think about those top 10 risks that I mentioned, what industry or business doesn't have that?
Sure.
Yeah.
Every industry has a key customer. Every industry has legal issues. Every industry today has cyber risk. So, I mean, these are relevant to any industry and any business.
Now, Michael, let's talk about your fee structure. I know probably anyone listening is going to say, well, how much does this cost and what's my responsibility? And I know as a third-party outsourcing specialist, you do all the work on your side for the business owner. Why don't you walk through what type of work you do to set these insurance companies up? And also what fees are involved. You have to be specific on. I know size makes a difference, but let's talk a little bit about that.
Yeah. So first, there's a couple of there's three things that have to happen in the way of cost or outlays. The first cost is that we need the client would need to pay us once they go through. There is no cost to go through the feasibility study. So there's no cost to, the only thing the client has is put out to see what risks and premiums that they have that they can insure inside their own private insurance structure is we need to gather the data. And once we get the data, we send that out to the actuary. We do not charge for that. So there's no cost to try it on. And that shows the value. I always say in the absence of value, fees are an issue. we want to show the value first. So there's no cost to go through the feasibility analysis. Once the client goes through that and they see what risks and coverages they want to purchase and set up their own, and they say, go, I want you to set up the private insurance structure, they need to pay us an engagement fee to get the structure or the segregated asset plan established. And we charge 6% of whatever that premium is that they selected. So if the premium they selected was, for example, $200,000, then we're going to charge a setup fee of $12,000. We do cap that setup fee at $60,000. So that's anybody doing over $1 million of premium. We do cap the setup fee. That's a one-time setup fee. The other first-year requirement is that before any Department of Insurance would give the segregated asset plan or the private insurance structure the ability to operate within its jurisdiction, they require it to have startup capital. Puerto Rico's requirement is a third of whatever that first-year premium is. So they have to have the capital to put in addition to the premium. And that's not a cost. It is an outlay, but it goes into their segregated asset plan as capital. It meets the Puerto Rico capital requirement, and that also can be invested as well. And then the ongoing annual cost is going to be dependent on premium size. It ranges from a high of 10%. It can go down to as low as 6% annually based upon the premium size, and that is a negotiated rate. We do have to pay a licensed insurance direct writing fee, or the client does. That's deducted, and those annual fees are deducted out of their premium. There are two components of that. There is a direct writing insurance fee to go through the licensed insurance and reinsurance companies to get to the segregated asset plan, and then we charge an annual fee to manage and operate the segregated asset plan, which includes all the monthly financial reporting that's done to the Puerto Rico Department of Insurance. We provide the quarterly financial statements to the client. It includes the annual actuarial underwriting review, the annual audit. We use RSM as our auditor. They audit the entire structure every year. Adjudication of claims, anything and everything really to do with the operation of an insurance company structure. That's what that fee includes. The only thing we don't do is we don't custody the assets for investments, and we work with some preferred investment firms in the United States to do that.
I think that was a great summary, Mark, and to reiterate your point, because I think it's really well put, which is, fees in the absence of value are a problem, but when fees are always relative to value. And I think that for a lot of the families that we've worked with that have gone through this process of setting these up, it's a value proposition. And again, that one-time setup fee is a one-time fee. And what families or anybody listening has to understand about the structure is you're forming a private insurance structure. There are requirements that you have to go through in terms of annual audits, in terms of working with the jurisdiction. And that's really what Captive Alternatives and their team does. If you didn't have them, you'd be responsible for doing that yourself. And again, we have our own private insurance structure. That's not something we're qualified to do. So, you have to work with experts in this particular arena. That's always been our position. And so I think that long term, when you look at the structure, those fees really become a non-issue really at the end of the day.
Yeah, let me just mention, every year we hold a conference. We hold it in Puerto Rico for all of our clients and advisors to come to, and John and Michael have been there. John has participated in it. We had a gentleman, and who we have at this conference is we have our actuary speaks, our accountant speaks, the claims guy speaks, we have our tax attorney speak, we have representations from the Puerto Rico government speak. And I remember this past year.
It's a great conference, Mark. It really is.
And I don't remember, John, if you remember at the end of the first day, there was a gentleman, one of our clients was like, after the day was over, we had all these people speak, and he goes, I always complain about your costs, but now I know why. He said the value we're getting in this is extremely efficient, and I don't have to worry about any of this stuff. It literally is a turnkey system. So we do provide the value. People always want to, talk about costs. I'm sure they do with John and your planning, but at the end of the day, after they go through the process and they do it, I don't hear them complain about costs anymore. because they see the value that's being provided. And you hit a good point, Michael. They are in the insurance business. They are in the insurance company. Nobody knows how to run an insurance company.
And it's common sense. I mean, you can't start up any enterprise without investing capital or without costing something to run your operations. So that cost is borne by you guys doing all that work. And if it costs 6%, so be it. It's the benefit of the risk management side of it. It's the benefit of and we don't like to talk about the income tax issue as much, but that is a huge attractive piece to this, where clients could deduct their premiums as a business expense. It's all legit. So that has benefits. So if you look at all the benefits of the estate planning piece, the income tax piece, the risk management piece, most certainly that's the key piece, is the risk management. You look at those three dynamics, this could be a very, very important tool that business owners should look at to say, how do I protect my family? How do I protect my company? And how do I win by doing that in this structure? So that to me, it's not a pitch to cap all per se. It's just a pitch to the logic and common sense of running a business. And you have to manage risk, and this is a portal that allows you to do that.
And to your point, Mike, or to your point, John, I had a CPA whose client went through this, and he said, "Well, this is a very tax efficient way to mitigate against catastrophic risk."
Sure.
Yeah, that's a great point. That's a great point. And what we do with Copper Beech is we've sort of, I guess, touted ourselves as, once the captive is formed, now what do you do with it? And that's really where I think a lot of the families we work with find a lot of benefit in these captives. We have a lot of families that have, as you mentioned, I think on the last podcast, Mark, you have the ability to access the underwriting profit and surplus in your private insurance structure to do other things with it. So we have many families that have taken loans from their private insurance structure to go buy other assets, go buy other businesses, start other businesses, make family loans. So there's a lot of the family office planning that we do at Copper Beech, where these structures become a really, really important tool to help them do that. A lot of the planning goals that they have.
Yeah, we look at it as I think we talked about this in the past as well, and we should have another podcast in the future on this. Is creating an estate bank. This is how you can create an asset. To your point, Mark, about allowing access through loans to do other projects, as Michael's point just was made. It's an interesting dynamic in how you put these together.
Yeah, and if you think about insurance companies in general, all insurance companies, commercial, private,
they do the same thing.
They do the same thing. They're in the business to manage risk and make money. I mean, paying claims is an important function of what they do, but it's not, that's not what they don't want to pay all their assets out in claims. So the private insurance structure is as long as it operates an insurance company, you get the same benefits as a commercial market does, and that's to invest those assets to make the money for the private insurance structure.
Well, Mark, this has been wonderful. Thank you so much again for coming on and doing 2 podcasts with us, which is I know sometimes, hopefully it was enjoyable for you. Hopefully it wasn't too much of a chore, but we really appreciate you coming on. Are there any last thoughts that you have? Any stories that you may want to share? In addition, I know you shared a couple already, but any other stories? Because I think our families really like to understand how this affects them, and any time you can share a story of this private insurance structure, I think it's helpful for them, because they may have had these issues in their own business world, and having this outlet may help in the future.
Yeah, let me just first of all, thank you for having me. I'd be more than happy to come back anytime. I will tell you that the majority of the prospective clients that come to us initially have heard about the tax benefits of an insurance structure, but by the time they go through the process with us and it turns into a risk mitigation conversation.
Absolutely.
And especially as you look at these enterprise risks, business owners, most of them don't know, especially in the family office structure, don't know that you can cover these risks. And so it's not like we're recreating a wheel here. We're just educating the consumer that these are risks, these are insurable business risk, and if you're going to do it, why not do it in your own private insurance structure? So the conversation always does turn to a risk management conversation. And again, one of your clients, one of our mutual clients, said to me, that these kind of risks were our worst nightmares. To know that we now are pre-funding that through our own private insurance structure helps us sleep better at night. And I think that at the end of the day, that's what this is. It's not just about the tax benefits that why people do this. These are literally legitimate concerns that the business owner
couldn't
has.
agree more.
Yep, absolutely.
So that's my story, and I'm sticking to it.
Again, thanks, Mark, for your time today, and Eric, I think that was a great podcast.
I think it was as well. Lots of questions answered. Hey, Mark, one last question. The audience that's listening to you right now sparked some questions in their mind, I guarantee it. How do they reach out to you to engage you in a conversation?
So obviously, there's two ways. Obviously, email. My email address is msims, M-S-I-M-S, at captivealternatives.com. You can call me directly. I'm going to give you my direct number, 812-327-3341. You can always reach out to John and Michael. They got the red bat phone to me. And there is there's a lot of information on our website, www.captivealternatives.com.
That's a great website.
You can find a lot of information, good information there, and you also can reach out to us through our website as well.
Is there a book on your website that David wrote?
Yeah, there is. In fact, we're about ready to release version 3 of the book. So if you do go and want to access the book on the website, it basically talks about our structure in a little bit more detail. But we have a version 3 getting ready to come out. As there's been some changes under the Trump tax reform where we had to just address a few things that are now questions that come up. But we do that in the third book.
Right.
All right. I appreciate it. Who's David, by the way?
David Kirkup is our COO and CFO.
Gotcha. All right.
Yep.
Fantastic. Well, thank you, Mark. You're a great guest. John and Michael, thank you guys for bringing them on again. And
thanks, Eric.
just like Mark said, if you are connected with John and Michael, reach out to them. They've got the bat phone directly to them, and they can discuss what the best way to get a hold of them is, and if it's something that they should be considering. So if you've got those questions, reach out to one of these three gentlemen. They've got the answers. All right. Thank you all for listening to the Truth About Wealth podcast with John and Michael Parise. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when John and Michael come out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thank you so much for listening today. For everyone at Copper Beech Financial Group, this is Eric Johnson reminding you to live your best day every day, and we'll see you next time.
Thank you for listening to the Truth About Wealth podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Copper Beech Financial Group. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.
This material is for informational purposes only. Neither APFS nor its representatives provide tax, legal, or accounting advice. Please consult your own tax, legal, or accounting professional before making any decisions. Securities offered through American Portfolio Financial Services Incorporated, a member of FINRA SIPC. Investment advisory and financial planning services offered through American Portfolio Advisors Incorporated, an SEC-registered investment advisor. Copper Beech is an unaffiliated entity of APFS and APA. Any opinions expressed in this forum are not the opinion or view of American Portfolios Financial Services Incorporated, APFS, or American Portfolios Advisors Incorporated, APA, and have not been reviewed by the firm for completeness or accuracy. These opinions are subject to change at any time without notice. Any comments or postings are provided for informational purposes only and do not constitute an offer or a recommendation to buy or sell securities or other financial instruments. Readers should conduct their own review and exercise judgment prior to investing. Investments are not guaranteed, involve risk, and may result in a loss of principal. Past performance does not guarantee future results. Investments are not suitable for all types of investors.